All right, hello and welcome to Camel Finance. I'm your boy Camel, and I think we just started the final leg. Now, often when I show this, people get really quite triggered, and I understand, right? I understand that you don't believe that there's a new all-time high coming pretty soon, but unfortunately, that is what the charts are hinting at. This has been a base case of this channel, and this is my own variant. This I've called the melt-up chart for some time. I think we're finally about to break out and start heading up towards all-time highs. When we were at this local high back in July, we were only a few percentage. In fact, let me measure it for you. Something like, there you go, 4-5% from the all-time highs at this level. So as it stands, we're probably going to get back to this level from July pretty pronto. And then from there, like I said, that final 5% should come pretty quickly. Once, of course, we breach the all-time highs, then all the bears are going to have to capitulate. And that's what's going to drive and fuel this final portion of the blow off top melt up. Now, again, if you've been here before, this is nothing new, okay? This is nothing new. This has been the base case. This has been the primary expectation. And I've been saying over and over again, there's a time to be out the market, there's a time to be in the market, and there's a time to go fishing. It seems like we're practically back to full exposure, i.e. it's now time to be fully in the market. And of course, once we're fully in the market, it's then time to put your feet up on the desk, go fishing into the end of the year, and just let the market give you what the market's going to give you. Now, some of the commodity charts, like oil, cotton, and corn, are showing some real deflationary tendencies here. And the long and short of it is there should be an equity melt up ahead. Now, of course, the primary thesis, this whole melt-up chart, this whole there's one final blow-off top left in this rally, has been centered around this inflation-deflation pendulum, where you have a high inflation environment on one side and the pendulum swings from highly inflationary to strong deflation. This is an out-of-date chart, says we're here. I would say that for sure now we are past this Goldilocks zone in the middle where things don't look so bad. Inflation's coming down. We can see the light at the end of the tunnel for the rate hikes. We are well past this now. I think we are here. I think CPI is coming down. Like I just said, there are a bunch of commodities showing deflationary tendencies, and that's why this oil short keeps going down, right? That's why this oil short looks so good. Remember, markets are very, what's the word? They're arrogant in a way, right? They've got short-term memories, and a lot of people, a lot of market participants are very sure of themselves. When we were in this neighborhood, I took this short publicly. I called it out ahead of time. I took this short, and I said that this makes the most sense because we are indeed heading towards the left-hand side of this inflation-deflation pendulum. And everyone thought I was mental. Everyone said, no, there's a war in the Middle East. Oil has to go to $150 a barrel because that's what CNBC told me. And the facts are the facts, right? This is well past the midpoint. This is well past this Goldilocks zone. Like I said, we're more likely here on our way to deflation. And if that wasn't true, then you wouldn't see oil coming off like this, especially given all of the quote-unquote macro stuff going on in the background, right? So I point at this once again and I say, I believe we've just put in the final breakout. I believe we are just on our way to see new all-time highs. I believe I'm going to be able to take this one off and say, that was a great call. Remember, we made this call all the way back down here when everyone was posting 2008 fractals. And I said, no, we are going to run the all-time highs. We are going to have this equity melt up. It is going to be driven by this inflation-deflation pendulum. And of course, we are going to see the Fed pause, and that pause is going to catalyze that final rally to all-time highs. Once we get to the all-time highs, we will probably see something break and the Fed start cutting rates with the same level of aggression that they were raising them. But as you can see from the CME, right, we are done hiking rates. We are absolutely done. If I click forward into January, you can see just under 85% chance that we are done hiking rates. So the pivot to a pause, remember, is bullish. The pivot from a pause to cuts is historically very bearish. I was also pointing at this, right? Credit spreads, high yield index option adjusted spreads. As you can see, right, another touch, and what do you see at the hard right edge? Not only a touch, a rejection at resistance, okay? This does not speak to some kind of credit event. In fact, it speaks to the complete opposite. There is indeed room for this market to run the all-time highs. There have also been 2 times in the past 40 years when the S&P 500 rose for 7 straight days following a 100-day low. The first was on March 20 in 2003, and it marked the end of that bear market. The other was yesterday. We were also talking about this pain trade over and over again, where the hedge funds have puked their positions at the lows, which is of course synonymous with bottoms. And what have we seen since then? Massive upside relief at least. Remember, the symptoms of the pain trade is it starts slowly at first and is not recognized as a change of conditions. Then it explodes higher, followed by periods of consolidation, which then continue to break even higher, not offering any real dips. And it ends up leaving shorts trapped and underinvested longs without any entry, and new shorts continue to get squeezed. This repeats over and over again until it exhausts itself. And you can see we're starting to see this from the stock market. There's no real way to get in unless you're a breakout trader here, right? We've also seen this with Bitcoin, haven't we? Bitcoin continues to rally. It's up something like 100, 120% from the bear market lows. And we still have people calling this thing an early bull market. Speaking of Bitcoin, under the hood, okay, things continue to improve. Custodia Bank just launched its own Bitcoin custody service. So this is really revolutionary. This is something that people were talking about for a long time as a highly speculative thing. Are Bitcoin banks one day going to exist? Well, yes. The answer is yes. Now they do. So go and take a look at this in your own time. I'm not going to go into it right now. Not to mention Wisdom Tree Enhanced Commodity Strategy Fund is said it's going to invest up to 5% of its net assets in Bitcoin futures contracts. So is this the minimum that we're going to see from all these funds when these ETFs are approved? Are we going to see these funds jump straight to a 5% allocation? If so, nobody, including myself, is ready for the tsunami of money that's about to flow into this space. And so just before we jump into the charts, I want to play you this clip from yesterday. The Nasdaq, right, closed right around this resistance line. If we can get a push off today, then I think I'll add the long for the Nasdaq, right? We'll just have to respect the breakout and see what happens. But I am cautious that there are gaps below. So there's a good chance that we add this long, we pay a stop, and maybe have a tighter stop than this, pay a stop, and then fill these gaps, and then look to go again on the next breakout. So something like this, perhaps, right? Something like this, fill the gaps, and then break out. So maybe this thing takes 2 attempts. If it rejects today and starts to head down, then we'll expect that gap fill. But if not, if it continues to follow through, then we'll just have to respect the breakout, okay? We've done this multiple times before, and it usually works out. So not much more we can say about that. The S&P 500, not yet broken out, still lining up this for a long. But as I said yesterday, right, Nasdaq broken out, retested the blue line, resuming off. So we're officially long the Nasdaq, right? Shouldn't be a surprise. Now, as I said in yesterday's video, as I've been saying for weeks, it's possible that we are going to roll over here, pay a stop, do something like this, right? Something like this, get stopped out and then go again, and we'll just re-enter the long on that breakout again. Okay, so maybe this thing takes 2 attempts. I don't feel super comfortable with this position, but I will say this. I also did not feel super comfortable when I took this position right here, and we ended up capturing this enormous rally right here before hopping out of the market and sitting on the sidelines. So now I believe it's time to be back in. Like I said, if it takes 2 attempts, that's what stops are for. That's why we size our positions. Overall, this is likely going to melt faces. This is likely going to catch a bunch of people offside because everyone seems to be existing in a fear state. I also added the Dow Jones. So again, how long have we had this squiggle, right? How long have we had this squiggle drawn? Yes, we deviated from it more than my squiggle suggested. But like I was saying, break out, hold that level, start to move higher, and that's a long from me. So for now, long and strong the Dow, and we'll see what the market can give. Again, if it takes 2 attempts, if we have to come back down and backfill these gaps, then that's what we'll do, right? We'll just re-enter on another breakout. But for now, the thing is broken out. It's holding multiple days across. So let's continue to push this long and see what the market will give. Lastly, the S&P, as you can see, like I said, it's not really broken out, but if this thing is going to break out in the next couple of days, then we'll get long, and again, we'll push the trade into the end of the year, expecting to see this all-time high run. VIX looks like it's calming down, doesn't it? Again, kind of synonymous with seeing the space ahead for the market to rally. And the Russell 2K yet to break out. I may or may not add this position, only because I've got a whole heap of stocks from the member section already. So obviously I need to keep the individual trade sizes between 1 and 2% if I'm stopped out. And you have to keep sector risk contained below 6%, ideally below 5%. So I'm not trying to add too many longs. I may or may not take this, but you could argue that since I got so many stocks open already, plus these 3, once we finally get around to adding the S&P, do I really need the Russell? I'm not really sure. Probably depending on whichever breaks out first, whether it's the Russell or the S&P, whichever one breaks out first, I'll take that as a sign of strength and add that one. But both trades are valid if we can break out of here, of course. Bitcoin still looking to lock people out, isn't it? Look, still grinding up, still grinding up. Now, I remember this exact setup in gold right back here. When we first broke out, right, let me zoom in so we can see what's going on, right? We had this big downward sloping blue resistance line, broke out, we got long publicly here. We also flipped short and then got long again. And then what happened was we set this, right? We set this wedge right here, and everyone was saying, rising wedge, that is bearish, gold is going to break down. And I said, no, this is a lockout move. This is a lockout move. We're going to break to the upside. And sure enough, we did, right? We continued to push this trade, by the way, all the way up to somewhere in this neighborhood, and then we hopped out. But this rising wedge thing from gold, I believe, is exactly what Bitcoin is doing. I believe this is a lockout move in progress. I believe that we're going to continue to see this thing put in what looks to be a bearish rising wedge, only for Bitcoin to then break out of the top and rocket up towards 40 or 42K. So I like what I see here. As I was saying halfway through this video, you know, this market is up from the lows 125% at the time of recording this video. And yet a whole heap of people are still calling this either the early stages of a bull market, or they think that for some reason, the only logical thing here is to come and retest the lows just because that's what we did back during the C19 plunge, right? But we don't have to do that. In fact, as I said earlier with the pain trade for the stock market, the pain trade for Bitcoin is also higher, okay? An awful lot of people did not get their allocation down here. That's why they keep calling for 10K and 12K and a retest of the lows. That's why bearishness is so popular at the moment, because the majority of people missed this entire rally. And so how do we punish the most amount of market participants? We fly out of the top of here and continue to lock them out and force them to chase. When they finally start chasing at 40 and 42K, that's when we'll get a significant pullback into that daily and weekly cycle low. Anyway, one day at a time. For now, I expect this grind to continue to lock people out. I expect this to continue to move to the upside. For those of you that are interested, here's the XRP trade, long and strong, continue to push. The related equities starting to look better and better, aren't they? So breakout, retest, resumption all day long. And here is MicroStrategy, as you can see, about to take out this local high cluster, and then I would think 500, 600, 700 come pretty prompto after that. What I'm seeing out of Riot, again, it's got to get out of this downward sloping red resistance line to really confirm that we're in bull market territory. We've got earnings coming out this morning, and we seem to have half green and half red. I never read the company reports. I don't care. I just let the chart tell me what to do. And for now, it's not breaking down, right? We've got to stop just in case. We're still above this horizontal range break. So allow a couple of days for this thing to shake itself out. And then I think we will probably resolve to the upside, because ultimately Bitcoin is in a very bullish state. We've got marathon earnings today. I think we're probably going to go straight to 12 or straight to 6. Okay, now I don't know which one. That's entirely up to whatever the earnings are and however the whole thing plays out. But we'll say this is the importance of sizing your trades, right? If you're sat here stressing like, oh no, I don't know what's going to happen to marathon. Like, nobody knows, okay? But if you don't care, it's because you sized your trade correctly. If you do care, if you're having anxiety, if you had a rough night's sleep last night because you know these earnings are coming out today, then, you know, slap yourself on the back of the head. Make sure you don't keep oversizing and over leveraging your trades, okay? And trade responsibly. So up or down, who cares, okay? If we get stopped out, then we just continue to push the strength, okay? These ones that look great, like Coinbase and MicroStrategy, we'll keep pushing these. Why? Because they're winning, because they're strength, okay? And we'll just abandon weakness, okay? If this ends up gapping down and taking out 6 and we pay a stop loss, well, that's what stop losses are for, and the market will have spoken. And we can say, thank you, Mr. Market, for pointing out that this was a bad trade to be in, and therefore we want to get out the way of it, okay? If this is a bad trade, then we'll get out of the way. Of course, conversely, nothing to say that this chart doesn't start to do Bitcoin things as well. That's kind of what I expect to happen. But like I said, nobody knows. So if you are stressing about this, then it's your fault, isn't it? It's your fault for over leveraging, oversizing. Behave, be nice to yourself. Okay, this is your financial future. Don't mess it up by oversizing and over leveraging. Look at gold, okay? Gold on its way to that daily cycle low. So happy days there. Silver kind of following my squiggle. So who knows what's going to happen, right? I certainly don't. But I would expect us to see a swing and a reversal out of here sometime soon. Then once we get that swing, all eyes become on that cycle low wherever it forms, because take that out and that tells us that this is probably what's coming. So overall, I go back to where we started, okay? We'll do a full circle. This is where I believe us to be, right here. About to put in the final portion of the blow off top rally, about to have this massive major melt up, about to finally trap all of the retail long at the top, okay? They've been bearish the whole way up. You know this if you've been on Twitter. If you've got a Twitter profile, okay? If you've got a YouTube account and you scroll through the YouTubers, how many people have been posting flaming thumbnails, okay? Literal fire, everything on fire. All these people that are apparently financial experts telling everyone that the end is here. They've been saying that the whole way up, okay? They've been saying that the whole way up, and they're all going to capitulate at the top, okay? Once we clear this all-time high, they're all going to say, oh, wow, they've engineered a soft landing and everything is great, okay? And then only once they're in here, okay, that's when they're going to cut rates. Everything is going to go deflationary bust. How do we know that? Because of the inflation-deflation pendulum, like I said, and everyone is going to get wrecked because that's just how the game is played. Retail buys the top and it sells the bottom. I'm your boy Camel. I hope you found value here today. Be careful who you follow, okay? Follow those that have a history of getting things right. Follow those with a humbleness to be able to put their hands up and tell you when they're wrong. Follow those that call their positions out ahead of time, rather than the ones that tell you after the fact they did really well. In the meantime, I hope you're doing well in life. Take care from me. All the best. Cheers. Bye.